Hi everybody, it's Thursday, September 4th, 2025. Our episode starts with our headline, 10-year Treasury yield anticipates weak jobs report. Scrolling through some of the main economic data released today, ADP employment numbers came out fairly weak, a good amount weaker than expected at 54,000 when it was expected to have 75,000. We had initial jobless claims a bit higher than expected. We had the continuing jobless claims a little better than expected, a little bit lower, just dropping just a little bit there. We also had the crude oil inventories a lot higher than expected. The forecast was negative 2 million, I believe it's barrels, and it was actually positive almost 2.5 million barrels. None of today's data is nearly as important as tomorrow's employment report. And the 10-year Treasury note yield dropped today, only 4 basis points, but psychologically, we broke this trend line here from May 1st, connecting to all of these lows. We broke pretty clearly below it. I know some traders have been sort of looking at more of a flattish line in this area too. We're clearly below that as well. And so to my eye, the 10-year Treasury note yield is anticipating a weaker than expected jobs report tomorrow. Moving on to community topics, the Robschild website is complete. When you go to YouTube and you scroll down to the description of my video, you can get the link here, how you can support the channel, and also my website, portfolio, daily reminders, and macro views. And this is what it looks like. These are the items in my macro views, daily reminders that I think are important to be considering on a daily basis, actually, not a once in a while basis. This is the framework that we're living in my strong opinion. All of these items have references that you can check out yourself. I highly recommend doing it if you haven't already. Most of the charts go straight to the Fred themselves. Also, in the right upper hand corner, it says Portfolio Explained. You click on that, and you have my entire portfolio, my own portfolio, with the number of shares as if you were to scale my portfolio to exactly, well, about $100,000 portfolio size. So the equivalent of a $100,000 portfolio size would, for example, have 626 shares of ZROZ. Of course, none of this is any kind of advice. It's more of a way for me to share what I'm doing and how I'm thinking. All of these, when you click on them, go through my explanation and my exit strategy. Also, at the very bottom, I have a change log that gives updates when I sell or buy anything. I am keeping this as a free website, free to access for the moment. I'm not sure if I'll always keep it that way. If you want it to stay free, consider supporting Robschild. You can click on the support button there or in the description. Not hard to find. Coming up, well, tomorrow's the biggest report of the month, the employment report. How many people want jobs and can't get a job? We also have continuous tariff updates. As always, thank you so much for watching, liking, subscribing, commenting, and supporting the Robschild channel. No changes to the crystal ball ratings. On to the charts, starting with the SPX, the S&P 500 rising by 0.83%. For now, this yellow trend line on the underbelly of these candles has, on Tuesday's candle, it turned out to be not a breakdown, but a fake down. I find it interesting SMH Semiconductor ETF has not broken the neckline of this Head and Shoulders top yet. Joining the 10-year, we have the 2-year Treasury note yield also dropping. This is obviously, again, restating what the 10-year Treasury note yield is said today, which is basically we are predicting a weak employment report tomorrow. We'll see how it pans out. It's going to be a very exciting morning tomorrow, I'm sure. Junk bond credit spreads tightened a little today. A third chart joining the narrative that I'm putting out there that the yields are expecting a weaker employment report. Look at this. Looking like it's falling off of a cliff at this point, the 10-year break-even inflation rate here. Yeah, it's only 2 basis points, but I find it interesting that today it dropped. Next, we have Bitcoin. Apparently, the 108,000 level was a stronger bounce level than I had thought, but we are still well within inside of this previous red candle, suggesting that it's looking more bearish than anything. Plus today's candle, after this move to the upside, if we were going to get more bullish, we would expect sort of consolidation at the top of this bullish move. Instead, it's starting to appear to look closer to a blow off top, suggesting that we are indeed headed back down to this level. And I am still expecting this to drop down to the $100,000 level. I brought up the dollar yesterday, talking about how it's basically going sideways lately, almost getting tighter here, winding up. And this is all while the US 10-year minus the German 10-year is actually falling. And a lot of the times what happens is the dollar follows this after this is moving. So it kind of does suggest to me that the dollar is about to actually fall from here, but we'll see. So that's all for me in my crystal ball. All in all, today in a nutshell for me was sort of just everybody get ready for that big employment report tomorrow, which could really shake things around. Tomorrow should be an interesting day, to say the least. Thank you for watching, and see you next time. Robschild.